Let's continue our analysis of Charles Sousa's third budget with Leslie Preston. She's an economist with TD Economics, Ashley Chinatti, reporter with the National Post, and Martin Reg-Khan, provincial politics columnist with the Toronto Star. Happy to see you two again. Leslie, for the first time on our program, nice to meet you.
My pleasure.
Good to have you here. Why don't we put you to work right away? Initial impressions of the budget.
Well, I think what strikes me most about this budget is just how similar it is to last year's budget. I think it's quite impressive how the top line revenue and expenditure lines are very similar to last year. Not a lot of new measures.
Is that a compliment or not?
Well, I think they're staying the course. You know, they set out a plan which they ran on, the Liberal government ran on, they were elected and they've stuck to it. So, you know, I guess that would be a compliment.
Full marks for keeping the course.
Right.
Okay. Ashley, your view?
I think, again, I think it's very similar to last year's budget. What we didn't see is a lot of that happy, fuzzy social justice language and new program spending that they announced last year in advance of an election. So, last year we had $810 million for disability support programs. We had new money for transit. This $130 billion that we're talking about for transit and infrastructure was announced last year. It's not necessarily new. So what is new in there are small, little consumer measures, a couple things to tinker with electricity bills. They might go up for some people with higher incomes. They might go down for people with lower incomes. But other than that, winter tires, you'll get a break on your insurance. Breaking news.
I'm writing you down as unimpressed. Okay, Martin?
Do you have winter tires on your car?
I do. I actually forgot to take them off for an entire year, so I had them
Not
all
a good
summer.
idea.
No.
I think winter tires is a good idea. My wife does in particular, for what it's worth, and all-season radials are not a good idea, so that's my commercial. Look, I think we all look for a good news budget or a bad news budget, and this one, truthfully, is a no-news budget. Or more precisely, it's an old news budget, because we had the real budget last week when Ed Clark talked about Hydro One and alcohol liberalization. So that's important news, and it's worth recycling that as the program goes on. But in general, I think what the emphasis, the narrative, as it were, is on infrastructure. And while it's not dramatically new, they have found a better way to pay for it, or at least plug some of the holes, to be more precise. And that's interesting. It's not sexy, but infrastructure is a good thing, and I think your previous guests were almost in agreement on that.
Yeah, they were.
So while it's not the same as budget goodies or baubles, as Mr. Fideli said, there's a lot to be said for that.
Let's look at the deficit numbers, and you heard a great deal of skepticism out here, Leslie, that given the size of the deficit today and the projected balancing date of 2017-18, a lot of skepticism about whether or not you could get there from here. What's your view on that?
Well, I certainly think the Ontario government has set themselves a challenging task. I mean, the biggest fiscal restraint still lies ahead of them. They've held, kudos to them, they've held program spending to 1.5% over the past 4 years. Well, now they have to hold it to 0.3% growth over the next 3 years. So, hopefully Deb Matthews' program renewal and transformation process it's planning to find $500 million in savings across government departments every year for the next 3 years.
Is that doable?
Well, I think they've proven that they have done it recently, but I think it is going to get more difficult as they go on.
I'm trying to see whether or not you're skeptical or whether or not you think it can be done.
Well, it's as an economist at a bank, I don't have a lot of experience, cutting $500 million out of a province-wide budget, but I think it will get more difficult. That says the province has a little bit of wiggle room with its contingency reserve in the out year. Maybe the cuts don't have to be as bad. In addition, the other side of this, which there isn't a lot of detail on, is the compensation envelope for the public sector, and they're, planning to hold the line on wage increases, and we don't. That remains to be seen how that will all play out. So, and we don't know the profile of those compensation envelopes over the next few years. Maybe there's something they know that we don't about 17-18 that will help them rein in expenditures, but no doubt about it, they have a tough road ahead of them.
It wasn't that long ago that every year the health ministry used to routinely get 5, 6, 7% increases because health inflation runs at, 4, 5, 6, 7%. Less than 2%. Is what they're forecasting for this year, and what they've actually managed to hold health increases to. Do they get some credit for that? I mean, it looks like they're on their way to doing it.
I think they get some credit for doing it from the fiscal perspective. I think the question is, what is it doing to our healthcare? And today we had the public sector union saying they're already seeing nursing layoffs in some areas. Perhaps that's because demographically those areas don't necessarily have the demand anymore, but you are hearing hospital budgets are increasingly strained as they try to shift care to the community, but then you also hear that they aren't spending enough to get people the home care that they need fast enough. They've done a lot to meet 5-day targets that they promised a couple budgets back, but I'm very skeptical about holding the line so drastically in healthcare spending. I think one way that we could do it without it hurting programs that patients see is the physician compensation. I mean, the last deal was $13 billion, essentially 10% of the budget. 10 cents of every dollar that the province spends goes to a doctor. That's significant. And
who'd you rather have get it?
Well, what about alternative practitioners, pharmacists, nurse practitioners, and midwives could be doing a lot more in this province. They cost a lot less, but we aren't necessarily empowering them to do so because the doctor's lobby is so powerful.
Got it. Martin, 17-18 is this drop-dead target. We will have the budget balance, so they have said over and over again. They haven't wiggled from that one iota. How urgent do you think it is, politically, that's an election year, that they balance that year?
Politically, I don't think it's a big deal. I think people in the talking classes overestimate the importance of a balanced budget. I personally like balanced budgets. Call me a right-winger if you want, but I
think one's ever called you that, Martin.
It's a ploy. I think it's important because you need to conserve cash. If you're a Keynesian, you conserve cash in the good years so you can stimulate in the bad years. So why don't we bring it back? And we do have the biggest subsovereign debt in the world. That's the plan.
Say that again. We of every jurisdiction
of every
subnational
jurisdiction.
Subnational.
Yes. So Ontario at $8.5 billion it's big. It is
biggest deficit,
but it's manageable. But it's only prudent to get it down, and everybody in the three parties agrees with that. So, but voters don't care about that. Walter Mondale proved that years ago when he said a balanced budget was an important thing, and Ronald Reagan ran up huge deficits. So. It's not politically important, but I think it's a credibility issue. I think it is important to the Premier, to the rating agencies, and to her finance minister. To your question, can she do it? I think she has to do it. I think that's a target that, barring unforeseen economic circumstances, they intend to do it. But it's going to be hard. I think it's banking on zeros for the public sector workers. Teachers are already flexing their muscles, are not happy about having to renew again for another 2 or 3 years for more freezes. And they have to keep the program review on. Now, can they do the $500 million a year on a $130 billion a year budget? Probably. Is it easy? No. Is there enough money at $50 billion a year in the healthcare system? Yes. You just have to reallocate and spend it more smartly. Not easy, but it can be done, and most economists agree with that. So.
Well, we've got one here, so I'm going to ask. You two, of course, being journalists, know nothing about what I'm about to ask Leslie, who's a real economist and a real Bay Street person. I want to know what the street thinks about the selling of 60% of Hydro One. Is that an attractive prospect?
Well, it's not really for me to say, I'm not a pension fund investor who might be looking to buy a stake in Hydro One, but I think it's critical for the province because the province has a very ambitious infrastructure investment agenda. It's also being warned by the rating agencies about its debt levels. So it's trying to find a way to fund these infrastructure investments without borrowing more than it needs to. So selling, or as they say, optimizing provincial assets enables them to find that money for infrastructure without having to add on to the debt, which is already pretty close to 40% of GDP. And, Moody's recently downgraded Ontario. The province wants to make progress on its net debt to GDP ratio. So in order to fund this infrastructure agenda, it does need to optimize these assets.
I get that, yeah. But will it? I guess I'm wondering, is Bay Street really going to find this an attractive proposition insofar as they're not selling the whole thing, they're just selling some of it, and the government of Ontario is still going to be the largest single shareholder? Is that problematic for Bay Street?
Yeah, you raised some very, very good points on that. I think the other side of the equation is we're in a very low interest rate environment right now. A lot of investors, they're seeking yield. They need, and an investment in a utility would provide a fairly steady rate of return for an investor. So in a world where, the 10-year government bond yield's less than 2%, I think there will be investors out there who are interested in getting a fairly steady rate of return from a utility.
That still looks attractive. Even 60% of Hydro One looks attractive. Okay. The politics of this, selling off 60% of Hydro One, how does it look to you?
I think that, we heard the opposition members criticizing this before and saying Ontarians are up in arms. I think most Ontarians, unless they pay their hydro bill to Hydro One, would say, what's Hydro One, if you were to ask them about it. Perhaps people who are politically engaged already, involved in a party, they probably have strong feelings, but I question whether this has trickled out. I'd say what I've heard from more people have gone a lot of texts and messages. Why wasn't wine in grocery stores? Never got a question about Hydro One.
That's the shiny bauble that Vic Fideli was just telling me. We'll get to that in a second.
But we want I think a lot of people, they want the wine.
Well, okay, the politics of privatizing 60% of Hydro One. How do you see it?
I'm glad you didn't ask the bauble question. I do
it's
think
coming.
I'm getting a lot of mail personally on Hydro One. I think people who watch your show, people who are politically engaged, are very concerned about it. I agree with Ashley that it's not. Most people don't know what Hydro One is if they live in Toronto, Ottawa, or the big cities. If they don't pay their bills to Hydro One, people who do pay their bills to Hydro One hate it and have been complaining to Andre Morin, the ombudsman, about getting ripped off on their bills because they provide crappy retail or customer service. So
I think it's the number one thing that he gets complaints about.
So there's not a huge "We Love Hydro One" lobby in this province, but from a public policy perspective, outside of the politics, public policy, I'm concerned about it. I'm not crazy about this idea of giving up part of our publicly owned electrical utility, but I don't think it's a crazy idea, and I don't think that people who are proposing it, that guy from TD Bank, Ed Clark, and Francis Lankin, a longtime New Democrat, I don't think they're crazy. They're not flakes. So I think there are some interesting ideas here. I think the way they've crafted the deal at 60%, but they'll be the biggest shareholder at 40 and nobody else can have 10 percentage points. They're getting rid of the politically appointed chair, Sandra Pupatello, and bringing in the guy who used to run the CPP investment board, David Dennison. So it's an interesting, the way they've structured it is very interesting. The idea,
I'm interrupting you here because we got 2 minutes left, and I do want to spend 2 minutes on the shiny bauble.
Yes.
We're really going to have a beer ombudsman?
Would you like to be?
What the hell's a beer ombudsman?
Yeah, well, I can tell you
Or will he be called the sudsbudsman?
I can tell you from my own email inbox, there are a lot of complainers about beer in this province. A lot of people are not happy about everything about beer and wine, and it's not easy to appease everybody either. So I would not recommend that job to anybody, first of all. But on the bauble generally, I think it's an interesting bauble. I think no one's happy with it, and so my assessment is the glass half full or half empty. And what I would say, because a lot of people are shooting this down and saying, this is nothing, come on, this is zero, this is a fraud. Governments don't turn the ship off state overnight, and no one else has done this. Mike Harris didn't bust the beer store up, and David Peterson didn't either. So a little bit of credit to the government for at least engaging on this issue, because Tim Hudak said he would, and then he said he wouldn't, and Andrew Horvath said it was a non-issue. So they're going somewhere. 450 supermarkets in due course, that's interesting. That's what I would say.
Leslie, how interesting do you find it?
I mean, I think I would echo Martin's comments that, it's an interesting first step for the government. They have this interesting sort of private sector monopoly for beer sales in Ontario, and I think, the council looked at the deal that the province currently has with the beer store and didn't think the province was getting a fair shake, so they're introducing a little bit of diversity in terms of where you can get your beer and holding the beer store's feet to the fire a little bit. And
you want the last 30 on this?
I question why they didn't go further on the beer store. I mean, I know they negotiated a new 10-year deal, but it still will have a pretty large market share. All 2-4s in the province will still flow through them. And I think a lot of people really didn't like that structure, really don't know where, historically it came from Ontario companies, but it's not anymore. And now we have it for another 10 years.
That was nicely done, everybody. Leslie Preston, thank you for showing up tonight. Do you know Ed Clark, incidentally?
I've met him.
You've met him. Because he's a big shot there at TD, or he used to be anyway. Economist with TD Economics, thanks for joining us tonight. Ashley Chinatti from the National Post. Martin Redcon from the Toronto Star, who gets the blame and or credit for all of these moves on the beer industry in Ontario, I think. Thanks, everybody.
Support Ontario's public television. Donate at tvo.org.